It's simple. Warren Buffett says it clearly in his book. It's buy low, sell high. So I'm buying low and selling high. It's really simple for me. Warren Buffett knows what he's talking about.
Don't you mean Warren Buffett?
What's up, everybody? Welcome to the episode 9 of the Richuation Room. Today's guest is JMac from JMac Investing and his new second channel that's caught a lot of success recently, The Educated Investor Show. I've been following JMac for a few months now and really enjoy his authentic and transparent approach that he takes to investing and how really makes it known that investing really is for everybody. And we'll be getting into a lot of topics today, including some of the new kind of hotness in the stock market, like the retail and Robinhood investors, as well as SPAC stocks, which are special purpose acquisition companies for you guys who are unfamiliar. And who better to talk to about that than the SPAC man himself, JMac. So appreciate you coming on today on this Sunday. And how's everything going?
Thanks, Rich. Really appreciate it. Yeah, man, everything's going well. Busy day, busy weekend, busy times over here. So, like you said, everything's popping off with SPACs and and the rise of that particular category of the stock market. And somehow I found myself right in the middle of it. So, so I'm kind of being opportunistic and taking up some of the opportunities that I found that came out of this new niche sort of that's been born.
Yeah, it's a good thing to do. I'm sure you've seen some momentum behind that. And that's something we haven't talked about on this channel yet. And we'll definitely get into that here in a little bit. But if you wouldn't mind, for those potentially listening that are unfamiliar with you, kind of just giving a little bit of a background on who you are and then maybe kind of transcend that into what got you interested into investing and personal finance.
Yeah, absolutely. Yeah, just I think it comes through in my channels and my live streams. Just a normal, average, ordinary dude who decided to. I really about a year ago started really taking individual stock, investing, stock picking myself, and beginning to build a dividend growth portfolio, and just taking investing and really getting serious about it to hopefully one day it be the vehicle that I can retire on. So I started taking it seriously. I'm 41 now. I was 39 about right around the time I really took it seriously. I had worked some corporate jobs. I actually worked at 3M for 5 years. So I was investing into 401ks, passive investing. And even with 3M, they have a employee stock purchase program where you can buy their stock on discount. So I had a decent amount of 3M shares, and that's actually what I brought into my portfolio. And I sold a lot of my 3M stock to build out a portfolio of holdings from the sale of the because they had ran way up. I actually, for some reason, I was brand new to really stock picking myself, but it was perfect timing when 3M stock was like 230, and that's when I sold a lot of it. And now it's been beaten down for the majority of the time I've been investing, but I sold a lot of it at the top somehow. Just timed it right and got lucky, I guess.
Yeah, sometimes that's all it takes. Do you remember when you kind of flipped that switch of, obviously you're passively investing in the 401k, but do you remember if there was any moment, or maybe it was YouTube or something, where you then got interested in, hey, I'm going to actually take a little bit of a deeper look into the personal investment side of things?
Well, I think that that stock employee purchase program that introduced me to individual stocks, and then I actually that partially really got me interested because 3M ran up, and I was also starting to get. I didn't even know about dividends, but I would check my ESP, and I'd be getting $30-$40 every quarter, and it kept going up. And I was like, oh, there's something to this, and it's pretty cool. And then I began to just start thinking forward, and I started thinking about 5G and stuff. And at that time, I really hadn't done a lot of research, and I was pretty confident Verizon would be a player in that. So, when that was one of my first purchases, I purchased some Verizon stock a couple years ago, and then I just started. It's funny. I know Matt Money was one of your first guests. So I then when I started buying some individual stocks, obviously I went on YouTube, finding some personalities. He was one of the first ones because, I think I was searching on stuff like how to build a portfolio and stuff like that, and he came up because he's very, very thorough in his portfolio reviews. So he was one of my first YouTube people that I subscribed to on YouTube, and was very inspirational to me as far as watching the dividend growth side of and understanding that in much greater detail. So, and then I started subscribing to a few channels, and I was like, even at that point, the landscape was kind of barren, right? And I was like, you know what? I didn't think I could do anything better, but I was like, you know what? I'm going to document my journey on YouTube too. So that's how I started my channel, just off of that. At that particular time, it's blown up over the last year. Lots of dividend channels have came online, but when I did, there was really like Dr. Dividend, PPCEN, Matt Money, maybe some more, but I didn't know about them, so it wasn't a whole lot. Yeah,
I think that's cool that you're obviously a lot of the larger businesses offer that opportunity to their employees to buy stocks at those discounted prices. I would imagine, maybe you can correct me if I'm wrong, but I'm sure there's a lot of employees that take advantage of that, maybe because they're told, hey, this is a good deal for you, but potentially don't even really know what they're doing until they look back on it and realize maybe what they've accumulated there. But I think there's probably a few other people that have been in that same situation where you've accumulated shares of a company that you work for. And then when you actually take a chance to go back and look at it and see what it's done for you, that kind of potentially gives you the motivation to look into it a little bit further. For your actual investment journey, kind of how it's changed, you said it's been about, just over 2 years, I guess, of taking it a little bit more seriously. Sounds like initially your focus was dividend investing. Is that correct? And how does that play into, is that still your main focus? Obviously we'll get into SPACs here in a little bit and maybe a little bit more of momentum trade or momentum investing. But talk to me a little bit about what your focus is, what the initial focus was, and maybe how that's shifted.
Yeah, for sure. I started off really beginning with just dividend stocks, and then as I was researching dividend stocks, then I began to learn about dividend growth stocks, and really quickly I moved to building a portfolio of dividend growth companies, because that income stream from the dividends, it grows exponentially year over year over year, even if you don't add new capital to your portfolio. But yeah, so it started as dividend investing, and really even early on with some dumb, mistakes with high yielding companies, MREITs. And I mean, one of my early videos is AGNC, but I was holding it and they cut their dividend in half or something like that, and that was my first experience with a dividend cut. And this was when the market was doing really well, so not like right now where there's so many dividend cuts, it's not funny. But so but yeah, once I got burnt a little bit with some just trying to chase yield, I started looking at the blue chips that grow their dividend year over year, and then we'll kind of move, I guess, probably along the course of the discussion of how I've really now my philosophy is I leave no strategy off the table, but I have built a core portfolio of dividend growth companies, and like I did yesterday, I did my dividend monthly update. And kind of how I describe it now is dividend investing is really kind of boring, and it's really kind of, you can do it almost blindly. You can just put it on autopilot, schedule some deposits. And I really don't, I'm to the place now where I like the holdings I have, and I don't plan on making too many changes with my dividend portfolio. So it's just set it and forget it, keep investing into it. And then all my research is on these other different strategies to grow and build wealth in different other avenues that the stock market provides.
think that's a smart way to do it. I've kind of had similar thoughts where when I initially got into investing, I think people take one of two mistakes. They either chase high yield or they chase the day trading high. Unfortunately, I went the day trading high route because that probably burns you a little bit harder than just some high yielding stocks does. So I've said it many times on here, but maybe you have experience with it as well. But luckily, I didn't, blow up any accounts or do anything too crazy. But it does seem like most people, and that's just the learning process, but they go with something initially that's kind of maybe a little bit of the money chase, and then they settle into their strategy a little bit more after that. But I agree, dividend investing is and probably should be relatively boring, right? We don't want any crazy. There's a reason why these crazy momentum stocks aren't paying dividends, right? These super volatile stocks aren't paying steady dividends. And I think that's a good core to have. I'm kind of the same way. I have my core portfolio. The majority of it is in dividend growth stocks. And because I'm a little bit younger and I still want a lot of the exposure to the growth, I've kind of balanced it in a way where the tech stocks that pay dividends like Apple and Microsoft, I'm trying to build those up to be my biggest positions and then kind of offsetting those low yields with some of the other more traditional dividend stocks with a little bit of a higher yield to kind of offset that. So that's kind of my strategy there. But yeah, and then after that, I'm looking into this. I'm like, why am I pigeonholing myself just into one strategy? So then I started a growth portfolio that's probably about 20% of the size of the dividend portfolio. And now I'm trying to slowly work into, different things like the safer side of options and maybe some swing trades or potentially day trades if it makes sense, but kind of still a little bit raw on what happened to me a few years ago with day trading. But I think that's really smart to be able to expand out and have different strategies and being able to learn rather than just be solely focused on one thing.
Yeah, for sure. I did also try. I think the cannabis sector was hot, and so I played that a little bit and got burnt when I was, in the beginning. Most people, it's either day trading or super spec stocks or high yield. That's typically where you go and you kind of get burnt, and you take your lumps and learn. And that's why I have a lot of people, a lot of newer investors now that are kind of coming online on my channel and social media. They ask me a lot of questions, and I'm like, really, experience is the best teacher. I can tell you. I mean, number one, we have some influence on YouTube, and people look for validation on the companies that you talk about. At the end of the day, everyone's going to have to build their own market experience, and so that's where I try to toe the line of being cautious, but also talk about what's relevant now. So it's kind of I've recently, in the last few months, transitioned to that, where not just talking about dividend stocks, because it's kind of redundant. Once you talked about Johnson & Johnson and Procter & Gamble, their business models haven't changed for 20, 30 years. They might acquire another company every couple of years, but there's not much you can talk about there. These new companies coming online that have disruptive technologies, have things that are, that could possibly change entire segments of the market. And, and those are the kinds of, that's what people are really want to learn about, but you should have that balance of some conservative investments in a portfolio, however you get them there, even, I mean, like you said, now, like anchors in the portfolio are Apple and Microsoft, and dare I even say Tesla, Yeah. You saw, I made a video recently. I was a Tesla hater for a long time, but now I'm on board and it's part of my portfolio. Bought a full share, and I plan. I'm hoping for a dip. I'd love for it to get back down to closer to $1,000. I'd be buying another share or two, pretty quick.
Yeah, I was going to speak to that in a little bit, but I wanted to commend you for coming around and switching up your opinion on that. A lot of people are pretty hard-headed, and you see it with the guys on CNBC and that kind of stuff. These short sellers of Tesla some of them are still holding their conviction that they're short sellers, and that's the largest part of their positions. And yeah, I mean, who knows? Tomorrow it could drop 50%. which would be happy for me because I'd be buying. But like you
Right.
said, I did want to commend you for that, because I know there's some people out there that wouldn't be willing to make that switch.
Yeah, well, like really, like I said, what kind of sealed the deal was I did a deep dive into the EV market, and if you do that, it doesn't take very much research.
Yeah.
It doesn't take a lot to understand that they literally, and I don't think I conveyed it as well as I try to do right now. There's the Amazon effect in retail, and then not just retail. Like Amazon can affect any sector. If they say we're gonna, like when they said they're gonna start doing possibly doing prescription delivery through Amazon, CVS, Walgreens, stock drop. The grocery sector, when they announced Whole Foods, that whole sector of companies, their stocks drop big. Kroger and the players like that. That is what I believe is going to happen with Tesla, with all of the EV sector, because at any given moment, if some of these small EV plays, if Tesla decides they want to enter into any of those markets, and it could either do it through acquisition, or they could build out the technology themselves, and they can disrupt essentially any and every company. So that's what I was trying to say, that there's going to be what I'm going to call like the Tesla effect in the EV industry. So just like the Amazon effect.
I totally agree. And I think people try and value Tesla as an automobile company, like a Ford or something. And that's just completely, that's so short-sighted in terms of looking at what Tesla's doing. I think you can't even put them in the sector of consumer. They're, when they build this thing out, they're going to be a utility company. They're going to be an energy company. They're going to be a consumer company. They're going to be a technology company, and probably more that I can't think of off the bat. So that's just something that we've never seen before. And obviously, some people would make the argument, well, it's a kind of a single point of failure potentially with Elon Musk. Obviously that guy is on another level and has proven people wrong time and time again. But you never know what's going to happen. That's kind of the beauty and the curse of investing in these kind of things. And I've said it many times. I'm a huge believer in Tesla and a huge believer in Elon Musk, but that's kind of the risky play when you buy those kind of stocks.
Yeah, no doubt. Yeah, I mean, I think his talent pool in the company though would sustain it, but you would lose that figurehead. So it could, that's where you would definitely have a stock price drop, but I think they could sustain the momentum. I don't know if they could sustain the innovation if he left,
and the entertainment.
But exactly, yeah. The tweets and I mean, hilarious guy to follow.
Yeah, I really love watching his interviews. He's very real, and that's something that you don't see out of a lot of CEOs in his position. Really doesn't care what people think, and he's going to do what he thinks is right for the company. Kind of speaking of that realm and CEOs, if people haven't checked it out, go on JMac's channel. He obviously got to do an awesome interview with Trevor Milton from NIKOLA. How did you get that interview? You just reach out to him? Obviously, he seems super receptive, and I know you got some good press out of that from other channels and things like that.
Yeah, so I like I said, I'm always trying to find an edge, in the channel and whatnot. And so what happened was, I invested into NIKOLA day one when that was the first SPAC I ever invested in, Vecto IQ, and so it sent me down the road of doing research on the company, and I found he did a couple interviews on one channel, only had 1,000 subscribers. And I was like, And at that point, I think I had 4,000 subscribers on my channel. And I was like, well, you know what? What would it hurt? What would it hurt? I'm going to reach out. So I first reached out on Twitter, and then they referred me to a PR person. And then I reached out to the PR, and I told the PR person, the Twitter, their social media representative, referred me to them, and I went real professional in my email, and told him, what I could, how we could approach the interview so that it could be vetted by their lawyers. So I laid it out so it'd be real safe for them to do. If he wanted to come on, we could do the interview safely. They could, and offered to edit it, send it back to them. They could review it. I wouldn't post it until they felt okay with it. So by taking all those extra steps and trying to get the interview, they were like, the PR person actually emailed me. She started off like he wasn't going to do it. And then she was like, mid email, she was like, okay, I'm just messing around. He's going to come on your channel. So they were cool. And but then it was a good interview, but it was rushed. And then, obviously then I did a second interview with Thomas Healy of Hyliion, and it was night and day, the two personalities in the interview. But yeah, that's how I landed it. Just doing my due diligence, and just I saw the opportunity, because if he was on another small channel, he could come on mine. I thought that was a potential to get him. So
it worked out for you, and I think that's such a cool thing to go after. I mean, there'd be so many people. There would be channels probably way bigger that would just assume this guy doesn't have time for me. Like, why is he going to come on my channel? He's running this up and coming company. So I think it's really cool you reached out like that. That's kind of been my play here. I'm like, you know what? I probably, for all the people that have come on the podcast, there's probably been 2 or 3 people that have just not responded or said, hey, I don't have the time, which is totally fine. But you don't know until you go out and ask. And I think that goes for a lot of things in life.
Yeah, I've had a couple other content creators that I'm connected with since then. They've told me they reached out and they were like, yeah, I'm thinking I'm reaching out to some other people that they never thought they would. And I was like, yeah, you never know unless you ask. So why not ask? I mean, and I've reached out. I'll tell you, I've reached out to many since, and I've gotten very little response from a lot. But am I discouraged? No way. I'm gonna keep trying.
Yeah, there you go. And not to mention, now you have that backing, right? I mean, all it takes is one, and then it's going to take one more guy to say yes. He's like, well, Trevor Milton did it. I'm sure there's some he's going to like treat this thing professionally, and then it'll just continue to grow from there. So that's really cool to see. With the actual interview itself, obviously you have a little bit more of a relationship with Trevor than I do. I've only kind of seen him from your interview and the other things that I've watched, and people tend to have strong opinions about him and NIKOLA. What did you garner from that interview? Did it make you respect kind of what was going on more? Obviously, you were an investor from the start. So if you could speak a little bit to either NIKOLA or Trevor's vision, or maybe, the haters, I might even be considered a hater at times, what you would tell them, or maybe how your mindset has shifted.
Yeah. With NIKOLA Motors specifically, I knew that it was really very much in concept mode and prototype mode, and still is. And so, within that interview, I didn't want to go hard hitting. Some people wanted me to, because I polled my community. I polled like Facebook, and I polled people and I asked them. But I told them I'm not gonna go at this guy like that, So that wasn't my goal or intention. And but it really became obvious and evident with tons of the Tesla channels, and so that they went hard hitting, and that they would go hard hitting. So I really just wanted to, just pick his brain and find out more, info. But and then, so yeah, I mean, I was bullish on the potential that could possibly be with their technology, but I've actually exited most of my position of NIKOLA. But yeah, I don't know. It's he's definitely a animated individual who, I think they could actually become a successful company, but it's going to be a really long road. And, they don't even have production really, announced or laid out at all for the Badger truck. They have it for, and really for 2 of the, they supposedly have 3 semis, Nikola 1, Nikola 2, and then Nikola Tre, which is the European model, which is being produced supposedly in Germany. So that's the only one that has sort of a, production facility and, has a plan for production. The rest of it is really just prototypes.
Yeah, and I think from my understanding of what I've seen from him, I think I'd have a little bit more respect and understanding if he kind of approached it with just the facts, right? I kind of see a lot of diverging and diverting from questions, which is where people will get a little bit skeptical. I think if he just came out and just said, "Hey, we do not have this yet. This is something, a concept, a vision that we have. This is where we plan. This is how we're making it happen, and this is the plan on how we're going to actually accomplish it." I think people would be a little bit more understanding and accepting. I think it's when you see him on CNBC and things like that, and they're saying, "Hey, well, like, when is this truck going to be released? When's the Badger going to be released?" And it's just like, buy tickets to Nikola World in December to find out. It's like, that's not what people want to hear. They just want to hear you be honest, right? And I think that's why a lot of people have kind of turned an ugly head to what he's been doing. It's almost a little bit too salesy. I understand he needs to raise capital. That's his job. But some of it's just been a little bit too salesman-like, where it's the guy at your front door. You told him you don't want the product, and he just keeps pushing you to buy the product. You're like, all right, dude, back off.
Yeah, I watched the most. I don't know if you watched it. You may or may not have. They recently released a promotional video with Heavy D, who's helping them build he's like a diesel guy, diesel truck guy. And so they did like a 13-minute it was a quasi commercial, and it was just went over all the specs of the Badger. But like I said, how do you have specs on a pre-production truck? You'd have to roll it off of the production line and get it through production first to actually get your actual specs that you're going to put out.
I couldn't even watch more than a few minutes of it. I just remember I remember watching it. I was like, Heavy D, like, blink twice if you need help. Like, are you being held there, against your will? How much are they paying you to do this thing? It was just weird. It just came off weird. I don't know who their PR team is, or maybe he's kind of like a Trump or an Elon, where he's just like, I don't really care what other people think. I'm going to do whatever I think is best. But Did you see he went on Instagram recently and kind of showed one of the semis. Did you see that?
I did see that, yeah.
That was also kind of weird, where he was like downplaying all the haters in the beginning and like this huge buildup to showing the semi. And it was cool. I enjoyed watching it. I enjoyed seeing kind of what was actually going on. The inside was super sleek. They had the engineers talking through things, but again, the way it was presented just was a little bit off-putting.
Anyway, I don't want to be sitting here because I've been a promoter and a fan somewhat early on, but I would probably sit on the sideline for a while until I see something with the actual. Like I said, I want to see, basically where I'm at is I want to see one customer walk away with a set of keys, crank a truck, drive it off. Once I see that, and they're getting it where there's some margin to be made for the company, I'll back the truck up and buy, invest heavy again into the company. Until then, I'm on the sideline. There's way too many other opportunities, and even in the EV space, there's so many different players that you could that already have things in the works that are in production, ready to go, and you don't have to question it. So
yeah, I mean, we're obviously being critical. It's easy for us to sit here in our armchairs and throw spears at a guy that's running this up and coming company. But honestly, more power to them. I hope they're successful. I think the competition is good for everybody. I think it's all steps in the right direction. So if they can pull it off, then I'll be their biggest fan as well. Why not? As we're kind of talking about these SPACs, if you wouldn't mind, maybe just a quick little overview about what a SPAC is, and then obviously we've been seeing a lot of them in the EV or the electric vehicle market. How that's kind of played into your strategy and what you're looking for there.
Yeah, so like I said, the NIKOLA Motors was my first experience with SPACs, and just with that one, I had to learn quite a bit because I bought in before they merged. So I was invested into Vecto IQ at the time. It was ticker symbol VTIQ. And then I saw that there's warrants and units. So that's the thing. So SPACs are special purpose acquisition companies, and they're the ones that IPO. So they're brought public, and they literally are formed. Their sole purpose coming public and IPOing is to acquire a private company and bring them public. So the IPO already happens with the SPAC. So they find a company, they go out, they look at most of them have a target of what industry or type of company that they're looking for, and majority of them will put that out on. A lot of them have a website, and they'll have the leadership team, which is usually 2 or 3 investors that have put up most of the money, and then the target like sector, like if it's finance or if it's energy or electric vehicle. So, and then they go out and they try to find a private company, and they begin to negotiate with the private company, and then if they come to an agreement and a deal, then the 2 companies blend. So the SPAC company usually will have 1 or 2 people that come over and jump on the board of the new merged acquired company, and they kind of blend together under a new ticker symbol. So it's a pretty if you've never invested in it, you should be careful, because there's a lot of nuances with it, and you should probably learn those nuances and learn about the whole process that a SPAC would take to IPO, acquire, and merge before you actually invest into these companies. And that's why you'll see with me, I'm taking a lot of caution with them, and only picking a handful there's a lot of them right now. There's a whole lot of SPACs that are hitting the market. But I'm only playing a few of them. But because I went down that road, I have learned that there's a lot of hype associated with them, and there's some really good opportunities to make money with SPACs, because you can get in at a very reasonable. I say that it's almost like you can, you can invest in public companies private. It's almost kind of how it is. It's like you can get in to a company before it ever goes public. So
yeah, and SPACs are definitely not something I'm fluent in at all. I'm trying to learn here and there. It seems like you said it's pretty complicated when you kind of get into it. I mean, the difference in warrants and that kind of stuff. Is it normal, or from your understanding, is it normal for these companies to run up like we've seen a lot of them doing? Is this a new kind of thing in the stock market that we've been seeing? Or have you noticed any SPACs that have gone the complete opposite direction? Can you talk a little bit about what we've seen lately is a lot of these huge run-ups, and then what you're going to see is a sell-off pretty quickly after that. Can you speak to that at all?
Yeah. Right now, I think it's more prevalent now. But what I'm learning is that even before there was a typical run up, even before this big boom of SPAC investing. There was always sort of a run up because you could get in at $10 or $11. Typically SPACs. Here's one more little nuance that you should know about SPACs. So the common shares of SPACs, when you invest, they typically hit the market for, and their shares typically list for around $10, right? And so everyone, if you invest into the common shares of a SPAC, say I buy 10 common shares of SPAC X. Well, that $100 that I invested, 10 shares, they take that money and put it into a trust. So that you're basically you almost can't lose that money, right? So that's why there's some safety and security with SPACs if you get in around the $10 or $11 price point, because if the acquisition falls apart and they have to and they can't pull it off and merge with the company, then they pay back the shareholders from the trust. $10. But if you bought at $18, you're gonna only gonna get $10 back. You're gonna lose $8. But now with the warrants, there's no that safety's gone, and if they can't acquire and merge and get through the SEC process and it falls apart, and you bought 1,000 warrants at $3, you lost $3,000.
Is there any way to ensure that you get the stock at the price where you're going to be guaranteed to get the money back? What's the difference with that?
You just got to get in at around $10.
Oh, okay.
But well, that's what I'm saying. Like the warrants are almost like options. So the warrants aren't guaranteed at all. There's no guarantee with the warrants. What warrants are is it's an option to buy common shares at a predetermined price in the future. So one warrant, and warrants typically list for like 50 cents. They're usually really cheap. They run up pretty quick once a target is announced. But let's say you buy one warrant at 50 cents, and typically the predetermined price is $11.50. So with one warrant, you can buy one share sometime in the future after they merge for $11.50. Now, in the case of NIKOLA Motors, you would have came out pretty good if you would have bought 1,000 warrants, and you could redeem those warrants for 1,000 shares of NIKOLA when it was at $70.
Yeah.
And you still have to pay the $11.50 per share. So you would have paid with 100 shares, you would have paid what, $1,150 plus the 50 cent you paid for the warrant, so that was $50. Yeah, $50 and $11.50. That would have been $1,200 for 100 shares, which is worth $7,000. So you would have set almost 7x your money on those warrants. So that's one example where it was a risk that would have been, but that's why they relate it to options. It's kind of like options, because you can win big, but you can also lose it all with warrants.
Yeah, it's a little bit of a higher risk, higher reward there. Yeah, it's been interesting to watch. Something I'm continuing to kind of do my research into. Luckily, got guys like you preaching the good word on YouTube about that kind of stuff. So that's something I'm trying to expand my repertoire a little bit more. I think another thing that we've seen lately, especially due to the recent downturn with the COVID stuff going on, is a huge influx of retail traders, or what people call Robinhood traders, right? Probably they're characterized as probably like young college kids or people just out of college, first making money, and now doing YOLO options on Robinhood or whatever their crazy strategy is. People like Dave Portnoy from Barstool kind of leading the charge on that kind of stuff. I know you've talked about him before. I think he's super entertaining. I enjoy kind of having him in the world. I know a lot of other people out there may have stronger feelings in the opposite direction. What have you kind of thought about with this new boom in Robinhood traders? Obviously, it's probably a lot of people that don't really know what they're doing, which maybe that's the growing pains you have to go through. But do you have any specific thoughts on kind of what you've seen with that? I'm sure your channel's gotten a lot more attention because of it, which is probably a plus.
Yeah. I mean, I actually think it's good for the long-term outlook of the stock market, because some of these people are going to do really well, and a lot of them are going to get burnt, obviously. And I'm talking about it more and more, because a lot of them are, like you said, trading on Robinhood and not in retirement accounts, not in a Roth IRA or traditional IRA. And at the end of next year, January, February, when tax time comes, there's going to be a lot of people with a lot of surprised looks when they get their tax form from Robinhood that says you owe, whatever, $5,000 in taxes, and for some of them it'll be just their entire refund is gone because it's going to taxes. So yeah, if you make a bunch of capital gains on these companies, you're going to pay taxes if you're doing it in a taxable brokerage account, no doubt. So I'm trying to educate the group of people that are following me on that, and I'm getting a lot of good feedback. People are starting to get it. I've got a couple guys that have been DMing me saying, how can I get out? I was like, you can't really get out now if you're up in these stocks. I said, what I'm recommending people, if they're in that situation, you're mostly invested into a taxable account, open up a Roth and put all your new money into the Roth. Keep the other taxable account going and put your new money into that. But yeah, so Dave Portnoy is a trip. He's good. He's my kind of guy because he's my kind of investor. Not my kind of investor, but I love that he calls out the suits and he's like, because and retail investors really have showed up. And they've showed up on some dumb stocks like Hertz, but they've also showed up into some of these companies that just got beat down and that they're probably not going to long-term stay beaten down. But they really did, where everyone else was doom and gloom. You look at some of the statistics of some of the companies that the retail traders went into when all the other institutional money was going out, retail money was going in. And huge gains were made because there was no fear,
Yeah, it's hilarious to watch.
Yeah. So I think it's good because now it can, and I think literally, I know there's this one guy I read. This is an outlier, so if people watch this and are like, maybe that'd be me. But there's this one guy on these SPACs. He started an account with $50,000. His retirement account had $50,000 in it. And he has traded it up to $1 million in like 4 months in SPACs, all in, all out on every SPAC that he went into. And so on like, and he did it on the high quality ones. He did it on like the Tattooed Chef, BurgerFi, and Hyliion. And he got his portfolio was over $1 million already. And the guy's only like 25 or something. So
yeah, that's that high risk, high reward again. Watching Portnoy. I try to catch his live streams every once in a while, but half the time he's just sitting there doing nothing. So I usually just catch the highlights where he's cursing out Dr. Fauci or cursing out the suits. But yeah,
or E-Trade.
Yeah, or E-Trade. It's been awesome to watch. I've been kind of following Barstool a little bit before that, so I kind of knew his personality. And then watching him kind of get into this game has been super entertaining, calling out the suits and calling out Warren Buffett specifically, which many people would never touch that with a 10-foot pole. The almighty Warren Buffett. So it is cool just to see that he has no filter, and he's getting screen time. So it's all about it. This whole world's all about attention and how you're going to get attention. I guarantee if you tell the whole investing world that Warren Buffett's washed up because you've been buying stocks that are beaten down and going up 40% in a day, it's you're going to get the attention of the suits on Wall Street.
Right. Stocks only go up.
Yep.
But the funniest one was him taking the Scrabble bag and pulling. Did you see that one?
Yeah.
So he stuck his hand. He said, "I can pick any ticker symbol, and it's gonna go up. I'm gonna make money." So he picks out three. He picks it out until he's entering them into E-Trade or whatever the platform until he builds a ticker symbol, and then he buys it. So. I
think it was Raytheon, which was probably a good choice because it was beaten down, and I think it was a green day. So what do you expect? But it was really funny to watch whether he was up or he was down. I was keeping up with it when he was losing like $300,000 a day, and either way, it's entertainment for me. So it's been really funny to see.
Yeah, for sure. I don't perceive him sticking with it. Obviously, he's just taking this this opportunity for while everything's kind of shut down. I was going to also point out that a lot of it is too because no sports and gambling is hasn't been available for all these sports, so that's why you saw a big uptick in people running over to the market as well.
Absolutely.
Trading.
Yeah, I talked about that before. I think the combination of not being able to bet on sports, and this is the first time, for the past 8+ years when we've been in this massive bull market. Every year, there's going to be a crash. There's going to be a crash. Don't invest now. Stock's too high, overvalued. Keeps going up. stock market crashes, and this is something I spoke with Ryan Giffen on a previous podcast, but we were talking about how a lot of the people in our communities were the contrary of what you normally hear. Everything's, buy when others are fearful, be fearful when others are greedy, something like that. And in this case, everyone's fearful, apparently, but more people than ever that I was talking to were investing in the stock market. It was almost like people knew that this is the time to do it because of what we've seen the past 10 years. Not to mention with now apps like Robinhood and Webull and some of these other ones, it's never been more convenient to buy stocks. I mean, Robinhood is, I used it initially before I converted everything over to TD Ameritrade, but it's more or less playing a video game. I mean, you just input a number and you swipe up, super simple, and then there's just very clean green and red, and it shows you how you're doing for the day. And I think that combination has made more people not only the accessibility because of the phone, but they're not intimidated by seeing all these numbers and all these crazy identifiers on stock charts.
Yeah, no doubt. Yeah, I mean, just last year, in 2019, everything went zero commission, and that was a game changer for. I mean, I thought that was really going to be a big boost in and of itself at that time. Where a lot of older investors were like, with fractional shares too. Older investors are kind of anti-fractional shares, but I mean that really does open the door to invest in anything. So I mean, yeah, it's a perfect storm, and then we get a market correction. So a big influx of investors. I mean, and but it also, on the other side of that, removing commissions also makes it easier for folks to just completely sell out of their portfolio because they don't have the fees anymore as well. So I think that plays into some of the volatility as well.
Yeah, and I think it helped boost this apparent as of now V-shaped recovery that we've been seeing. Obviously, printing trillions of dollars and buying assets doesn't hurt either, but a lot more people investing in the stock market potentially. And I think also the fact that for a while, and it's still kind of being preached, that the virus is temporary, right? That's what everyone keeps hearing. So it's not like this economic crash where the banks were screwing up. This is just something that, companies are solid, but we have this virus that's kicking off the economy. So I think a combination of the two is what we've seen and why we've seen such a strong recovery, in my opinion.
Yeah, I agree. For sure. Well, and 0% interest, because that also keeps institutional investors from going to too many other places because they can't. It's when there's 0% interest. I mean, that's one of Warren Buffett's famous quotes is interest rates are like gravity to the stock market. So if there is no gravity, then stocks can fly as high as they want, right? So. But back in the 80s, it was 15%, 10 to 15%, 70s and 80s. So you just invest in CDs. That's all people were doing. You didn't even have to go into the stock market; just put it into CDs.
Yeah, that's so true. It's 0% interest and probably playing out some more inflation than we're used to. You're pretty much getting robbed if you're keeping it just strictly in cash. So, It's been like you said, a perfect storm for what we've been seeing. Who knows what the future holds? But has the way the market's been playing out recently, has that affected your investment strategy at all? Let's say with your, not necessarily with the SPAC stuff, but maybe with your dividend portfolio?
Not really. Only adjustment. I made some adjustments during the crisis from some of the things that I learned about, that the economy is going to be forever changed. So I sold out of basically any brick and mortar retail. I sold out of most of those, and then went even in my dividend growth portfolio, went much heavier into tech. Tech, even just like Intel, Cisco, Microsoft. Big the tech dividend growth companies. So yeah, that's really the only changes I made. And I was gonna say too, I've added like a short-term money market ETF. I add that in, and I contribute to that a little bit each week as well. And that will be, kind of like my cash hedge So I invest some every week into the DGI portfolio without thinking about it, and then I'll invest a little bit into that money market account, and then that way on the next correction, that's going to be what I'm going to use to sell. I'll sell that money market ETF, and then invest that over the course of a correction.
That makes sense. That's something I talked about previously, which was not timing the market, but I've been timing my cash reserve, if that makes sense. So, I'm still feeding my account the best I can, but I think there's a time to build up that cash reserve so you're ready, and then there's a time to deploy it when you see the opportunities available. So I think there's a good balance to have there. And the things I've been avoiding is I kind of got lucky. I sold out of my energy stocks, back in January, just because I was thinking, I'm like, I mean, oil and gas, who knows? I mean, it just doesn't seem like the best thing to invest in for the future. I think they're going to be around for a long time, but do I think that they're going to be doing the business they are now? Probably not. And I think they're going to alter their business model, and they're going to probably go into more energy sustainable stuff. But for me, it was just hard to see that. And then I've never really been into investing in financials and different banks. Again, I think the distrust is growing there, so I feel like it's there's probably good value to buy right now, but just for the long term, I feel like there's some distrust there. Do you do anything? For example, my kind of hedge to that is I'm an investor in Square, and I also have a very small position, but I feed every once in a while some money into Bitcoin. Do you do anything in terms of whether it be crypto or speculation plays, or really just anything that's a little bit against the trend?
Yeah, I mean, not really. I mean, I used to. I was investing in crypto for a while, and I just quit investing in crypto. I have still made a couple. Typically, what I'll do is I'll buy a couple. I'll buy a few Litecoin every once in a while, and just because it runs right with BTC. So if it gets down to like $40 Litecoin, I'll buy a couple, and but. Not really, and I mean, when I say literally a couple, like two or three, just because I know once it hits 40, it's pretty much the bottom or somewhere close, and it typically runs up to 60 or 70. So it's a quick way just to double your money. But no, I don't do that. I don't mess around too much with those. And but I'm with you. I actually did also sell out of all my bank stocks, and I only still hold. Eaton Vance, which is it's a blue chip investment company. So so I think the investment companies are going to be okay, but I sold out of all my banks too, as well, and don't really have a hedge against that.
Yeah, and I think that's fine. I mean, I just have a little bit too much distrust going forward, but who knows? Time will tell.
Well, but they're being regulated into what they can pay and can't pay in dividends anyway. So, I sold like a week before that because I didn't know that was coming. But I was reading an article that J.P. Morgan might be cutting their dividend, and I was like, And then I mean, they were the only one that I kind of trusted of the banks, and and then it was about a week and a half later that the government came out and said, that all the big banks were going to be basically told how much dividends they could pay, so.
More regulations typically not good for the company. For people out there that don't know what the FIRE movement is, it stands for Financially Independent Retire Early. JMac's rocking a FIRE hat right now. I know you have another video that talks about FIRE versus FIRED, which means you're adding dividends onto the end of that. If that could kind of segue us into maybe some of your more long-term goals. Do you have a FIRE date? Are you all in on the FIRE movement? And then maybe, how do you see that playing out going forward?
Yeah, I mean, I'm more in tune and in line with the financial independence part of it. And so, yeah, I mean, I'd like to. I'm 41, so I think if I go real hard, I think 10 or 15 years, 15 max, that'll put me at 55, 56. But maybe 50. If everything played out perfectly, I could probably do it in 10 years. But yeah, I mean, it's literally, the difference between FIRE and FIRED is with the FIRE, I think the philosophy is that you sell off 4% each year, where with FIRED, it's dividends. You try to get your portfolio to where it's producing enough dividend income that you never have to sell any of your portfolio, and it's only dividend income that you can live off of, and or have it supplement your income for some other initiative like content creation or a blog or some other type of endeavor, but you don't have to go to a 9 to 5, and you can do whatever you want, really. So that's what I'm down with. I'm down with that. That's the plan. Even at 50 or 55, I'm still going to do something creative, something to have income generated other than a 9 to 5, but still doing something creative.
Yeah, I'm with you on that. And another thing I think I saw you mention was I think there's a difference in living life and just being a little bit conscious about what you're spending money on versus like, I'm going to buy ramen for the next 8 years to save $10 a week. So I'm with you on that. I mean, you got to enjoy life where you can. You can be smart about it and have a good balance while you're still on the path there.
Yeah, because some the real radical fire people are like, save 60% of your income or some craziness. I mean, and maybe you can do that if you're living in your mom's basement and you're working a job and and you have no bills, but I'm married with kids and they want to go to they want to go on vacations and they want to do things and they want to doesn't really work into our budget to do that, and but trying to save and extend it as far as you can possible is a good plan. So always trying to push it to the boundaries of saving as much and investing as much as you can. I'm down with that philosophy, but like you said, not living life. Yeah, I mean that's where I draw the line.
Yeah, I think that's going to keep you more sane in the long run. So I think that's a good way to do it. As we kind of close up here, we're coming up on an hour. What kind of advice do you have for anybody that's just starting their investing journey or really just are getting interested in personal finance? Maybe where they should start. Obviously, they probably should just go to your YouTube channel, right? That'd probably be the best place to go. But where else, if you had to give them any other suggestions?
Well, I mean, I have in my Facebook group, I'm getting this question a lot because I'm kind of bringing two worlds together, a little bit of the spec world with some of this conservative dividend growth, because my Facebook group was all dividend growth investors, and then I changed the group name to JMac Investing. I removed the dividend growth, and I just had to kind of ease everyone into it that we're embracing all investing strategies here, and then there was this influx, boom, and then we actually had to create some new rules recently of because there was a couple of people doing pump and dump stocks and stuff like that in the group, so we had to kind of rein it in a little bit. But and this is different since the pandemic. I've changed my recommendation to it used to be SPY, invest into a ETF. If you're beginning to invest, a broad-based ETF is where you should probably, if you want to just start investing today, invest into a broad-based ETF. But now my recommendation is the QQQ into the NASDAQ, because to me that is now the superior index, because it has the inclusion of a lot of the tech companies, even like DocuSign just became part of the NASDAQ 100. The future is upon us, and with the change of the economy, that's my recommendation now is QQQ. Invest in QQQ, and then, or you could split it, like 30% SPY, 70% QQQ, something like that. Because the SPY is the S&P 500, which is the 500 largest companies, so you got a lot of the even retail and stuff in the S&P 500. So, and you can just look at the performance of the two. QQQ has been just dominating the SPY recently, over really two or 3 years, really.
Yeah, I think it's been evident that technology is leading the way, and I feel like people think, hey, technology is here and this is the life we live in. But I think if you take a step back, it's still pretty young. I still think technology is just kind of getting rolling here, and some of these companies are, like we talked about, they're going to start taking over everything. I mean, there might be some regulations put in here and there, but even, this is a side tangent, but even Apple with like their Apple Watch, the information that they're collecting there, and as they continue to progress that thing, I mean, it's taking your heart rate, it's taking all these kind of things. That's going to be blend it into what you should do and what type of medicine you should potentially be taking. And there's just so many different avenues that these companies can go down. And guess what? They've been collecting data for 20 plus years now. And that's what we see with Tesla, with the autonomous driving. They've been collecting data for 10 years that these guys behind them just don't have. And I think they're going to leave them in the dust, but that's maybe a conversation for another day. Do you have any closing thoughts, and then kind of let everybody know where they can find you? And obviously I'll throw your links and everything wherever this is posted.
Yeah. Well, just I guess my kind of slogan and my mission is that everyone can invest, no matter, no matter your background, no matter, your knowledge level of investing, but, come into it with, a little bit of caution and then, but just dive in and just start investing is my advice. And, and don't be afraid of different strategies that the market has, provides, but be careful with them, because there's some ones that can really burn you. My main channel is, and why I have two channels is because I used to do live streams on my main channel, but it was really messing up my YouTube metrics. So, main channel is JMac Investing. And then my live stream channel is the Educated Investor Show. I recently started, because I had such an influx of subscribers, I'm doing an occasional live stream back over on JMac Investing, just to, reach out and embrace the new subscribers. But I'm using it also to funnel them over to the live stream channel. And once it gets monetized and stuff, I'll pretty much sever ties and just do all live streams over on that channel. And then on all platforms, on Twitter, Facebook, Instagram, Reddit, it's JMac Investing.
Very good. Thank you for your time, and we'll have to do it again in a few months and kind of check in on what's going on with the market.
Sounds good, man. Yeah, anytime, for sure. Let's do it.
It's simple. Warren Buffett says it clearly in his book. It's buy low, sell high. So I'm buying low and selling high. It's really simple for me. Warren Buffett knows what he's talking about.
Don't you mean Warren Buffett?